Wasabi Wallet. Unfairly private.
Is Bitcoin too expensive, and have you missed the boat? Well, there are a lot of different opinions on that, and it tends to be a matter of perspective and understanding of the asset itself and where it could potentially go. In the course of its 12-year history, there have been many that have bought Bitcoin at certain prices and sold for profits and been ecstatic about it at the time, only to be very, very disappointed later. We've seen people celebrate selling Bitcoin for a couple dollars a piece. Even in the context of this show, I've done videos talking about the price of Bitcoin, and it may have seemed expensive at the time. Just take a look at this clip from a video I made in 2016.
One person may look at the price and decide that it's expensive.
Now, when I filmed that video, the scary music was in fact warranted for some people because in the context of where we had been previously, it seemed relatively high for those unfamiliar with the asset and its potential. And hindsight is 20/20, but if you dig a little bit deeper, you may see that there are some things that are obstructing certain people's views of where Bitcoin could potentially go. So we're going to dive into Bitcoin price today and examine if it is indeed too expensive and if you have indeed missed the boat or not. I am Ben with the BTC Sessions, and this is your daily session.
Hodl the Bitcoin.
Really quick, before we get started here, a quick shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a variety of different services. Of course, they have their Bitcoin-backed loans where you can use your Bitcoin as collateral to get a Canadian or US dollar loan direct into your bank account. So if you need to get your hands on dollars, but you don't want to spend or sell your Bitcoin because one, that's a taxable event, and two, maybe you're worried about having to buy back in at a higher price, this could be for you. They also, of course, have their Bitcoin and USDC savings accounts with interest rates of up to 12.25% annually paid monthly. And they've got their B2X offering, which uses the same loan mechanism to instantly buy you more Bitcoin, effectively doubling your Bitcoin on the spot. If you want to check these guys out, links down below. If you click that link and opt to get either of their loan products, they will toss you $25 for free into your savings account. Up next, we have the Cobo Vault, one of my regularly used hardware wallets, and I love the thing because it is 100% air-gapped, meaning that you never plug the thing into an internet-connected device. It's all done via QR code, and that keeps the keys to your money safe and offline. It works with a ton of different wallets, some of my favorites including Blue Wallet on mobile and Wasabi Wallet on desktop, and a plethora of others. I highly encourage you checking it out. Links down below. And for reference, I am using the Cobo Vault Pro, which has the fingerprint scanner and the rechargeable battery. Now, I live fully on Bitcoin. I make my salary, I make my money in Bitcoin, and I live on it. I pay my bills with it. And one of the things that allows me to do that and helps me on my Bitcoin journey is BitRefill. This is where I can use Bitcoin to effectively purchase any gift cards for day-to-day purchases that I may need. They've just got pretty much everything here. I have trouble finding something that I cannot purchase with Bitcoin via this website. So head over there, check it out. They operate in a ton of different countries. You can just hit the drop down here. And fun fact, as you shop, you actually earn Bitcoin back. You earn sats back as you shop. So thanks to BitRefill for helping me out as I live on Bitcoin. And finally, if you're backing up any wallet, you may consider, instead of writing down your backup on paper, putting it in solid steel like the Bill Fodl over on PrivacyProsio. Reason being is if you write down on paper your backup, then that's susceptible to fire, to flood and water damage, or just accidentally throwing it out, and not so with the Bill Fodl, because obviously fireproof, waterproof, and probably you-proof, because you're a lot less likely to throw a solid piece of steel in the trash. Be sure to check them out. Links down below. And with that, let's dive into the show. At the time of recording this video, Bitcoin sits around $35,500 for a single coin. And many are looking at this going, that is just way too expensive. I have totally missed the boat. It is out of my reach. I won't even bother with it. And people may actually be driven to buy other cryptocurrencies thinking, well, maybe I can get lucky with this one. Now, I have previously done videos on why I believe Bitcoin is completely leagues ahead of every other altcoin out there. And I lay it out in these videos. There's two of them. One of them talks about the technicals around what makes Bitcoin different. And one of them is a post-mortem of what would have happened had you bought all altcoins, or rather kind of diversified into altcoins in the last bull market and then held on through into this one. I highly recommend you check out those videos because I'm not going to spend this video refuting altcoins. That is for other content. This is specifically focused on Bitcoin. So we're going to dive into that. So as I said, Bitcoin sits at around $35,500 per coin. Now, what could drive it up to this price? Well, one of the things that we're going to touch on first is scarcity. So Bitcoin scarcity is what is meant by that is that it is absolutely limited in supply. In fact, there will only ever be 21 million Bitcoin created forever. Now, these Bitcoin are issued over time, and the number of Bitcoin issued every 10 minutes gradually decreases every 4 years. So, in the beginning, in 2009, when Bitcoin started, 50 new Bitcoin were created every 10 minutes. And these Bitcoin were created and rewarded to what are known as Bitcoin miners. We're not going to dive too technical into Bitcoin miners, but effectively they are volunteering their computing power to help secure the network so that transactions cannot be reversed or tinkered with, so you can be sure that you have the Bitcoin that you actually have. So miners are rewarded with newly created coins and with Bitcoin transaction fees. Now, the newly created coins, since there is a strict limit on how many Bitcoin will ever be created, gradually reduce over time, and those newly created coins, in terms of revenue, will be gradually replaced by Bitcoin transaction fees as more people utilize the network. So as I said, in 2009, 50 new Bitcoin created roughly every 10 minutes and rewarded to miners. Every 4 years, that number has been cut in half. So in 2012, it went down to 25 new coins every 10 minutes. In 2016, that number was cut further to 12 and a half. And currently, every 10 minutes, 6.25 Bitcoin are created and rewarded to miners securing the network. This will taper off far into the future and will finally finish around the year 2140. So yes, well over 100 years from now. But at that time, the newly created Bitcoin will be minuscule, tiny fractions of a Bitcoin, and miners will be relying solely on Bitcoin transaction fees for their revenue in order to execute the service of securing the network. Now, of course, with only 21 million units, that means there's not a lot to go around. Most people, especially at a price of well over 35,000 US dollars, will never, ever have an entire Bitcoin. In fact, if you take all of the Bitcoin combined and you split it up evenly amongst every person on the globe, of course, these numbers fluctuate, but if you split it up evenly, each person on the globe would get around 0.0024 Bitcoin. That is 0.24% of a Bitcoin for each person. Pretty wild. Not a whole lot. Now, this is a website called bitcoinsperperson.com, and I'm just going to read a little bit. Now, I haven't refreshed here, but the ballpark numbers are there. Given that a Bitcoin is currently costs around 35,000 US dollars, there are only enough Bitcoins for every person to have around $84 worth. If Bitcoins were distributed using the global distribution of wealth, which is how money is actually distributed around the globe currently, 99.9% of people would have around $16 worth of Bitcoin, and people in the top 0.001% would have around 0.73 Bitcoins each. So even if we distributed this as global distribution is now, even the top of the top people in the world, the absolute elite of the elite, would have less than an entire Bitcoin each. That's a crazy statistic to see. And what if every millionaire wanted a Bitcoin? Well, it's not going to happen. Why? Because there are only 21 million Bitcoin, but in the world currently, there's just shy of 47 million millionaires. So each one of them would get less than half a Bitcoin if they each got a piece. Again, this is just drilling home how scarce Bitcoin really is. Now, before we move on here, I just want to give a little tip of my hat to Bitcoin Sampo on Twitter. He put together a resource which has compiled a ton of different great visual Bitcoin websites, and I'm going to be touching on a number of them here. So just in advance, thank you for putting this together, and I'll leave a link to this tweet down below, so if you want to check out any of his stuff, you can. Anyways, we're going to move on, and we're going to talk about something called unit bias, because I'm sure you're feeling a little bit of unit bias right now. If I can't have a whole Bitcoin, what's the point? So let's read the definition of unit bias here. Unit bias is the tendency for individuals to want to complete a unit of a given item or task. People want to finish whatever portion they have, no matter the size. It is a perception of completion that is satisfying to people. And they make a reference later in the piece here. They say a 12-ounce soda is seen as one unit, while a 24-ounce soda is also seen as one unit, even though it is twice as large as the previous one. So people only care about whole units as opposed to the total amount that they're getting. And so unit bias is very real. And so let's talk about it in the context of dollars and cents. So when it comes to dollars, people tend to look at the total number of full dollars that they have in their wallet when they're carrying them around. People also tend to gravitate towards having larger denomination dollars, maybe a $10 bill, maybe a $100 bill, that crisp $100 bill in your hands. People also allude to saving larger amounts of money, $1,000, $10,000. And what's the grand standard that people all aspire to? Oh, I want to be a millionaire. I want to be a millionaire, or maybe even a billionaire. Why? Because these are big round numbers, and that unit bias is showing through, where if I just get to $1 million, I'll have made it. If I just get to $1 billion, I'll be one of the elite. And so people have unit bias, and it comes through in how they approach currency. Now, dollars, of course, you don't have to be a millionaire to do well for yourself. You don't have to save $1 million or make $1 million. You can save $100 or $1,000 or $100,000. You're still doing pretty damn well for yourself. And even dollars themselves, as we know, are divisible into cents or quarters or nickels or dimes. So we can divide our currency. Well, Bitcoin is divisible. Bitcoin is divisible into 100 million parts. And the smallest part, the one that there's 100 million of them within a Bitcoin, that is called a sat or a Satoshi. And so a lot of people have been pushing to change the main unit that people account for Bitcoin in. And Satoshis seems to be the one that is picking up steam. It is the smallest unit of a Bitcoin, as I've said. And so people refer now, instead of buying Bitcoin, they will sometimes refer to stacking sats. And so it's interesting the way that Bitcoin was built, as it was the inverse of the way we deal with dollars. And here's what I mean. Our dollars are constantly inflated. They are printed, and you can purchase less with your dollars over time. And so as this happens, we start using higher and higher denominations and we stop using the lower denominations. Perfect example is here in Canada. We recently got rid of the penny. Well, I say recently, but within the last 10 or so years, we got rid of the penny. And why is it? Well, because we've inflated our money so much that the penny can't buy you anything anymore. And so it was worthless to actually create these pieces of metal that represent 1 penny when you could just use a nickel instead. And I would venture to say that eventually the same will happen to the nickel and the dime and even the quarter, maybe even the dollar. But the point is, the money becomes worth less over time, and so those lower denominations don't make sense to use. Bitcoin was designed to do the opposite, and the number of decimal places was there from the get-go to keep that in mind. And so over time, as more capital is attracted into Bitcoin, as more money flows into Bitcoin, and 1 Bitcoin can purchase more things, it makes sense to use the lower denominations. And so instead of looking at decimals and fractions of a Bitcoin, you can be looking at entire sats. Okay? And so it now makes sense. I would argue that using the denomination of an entire Bitcoin is already becoming useless, and the majority of the population would be better suited looking and stacking sats. So there are already a lot of people working on this and trying to make it the norm. And so there is a Twitter feed called Sats per dollar, and it tracks how many Satoshis you can buy with a single US dollar. And as of the time of recording this video, at least within the last half hour or so, for $1 US, you can buy 2,828 Satoshis with $1 US. That doesn't seem nearly as daunting. And we were looking at how many Bitcoins per person in the world, but what about sats? This number is a lot more pleasing to look at. We can, if we evenly divide Bitcoin amongst every person on the planet, each person would have 237,000 Satoshis. I don't know about you, but I feel a lot better knowing that I would have 237,000 of something instead of 0.237% of something. So it's just the unit bias lends itself to leaning towards sats, and I think that's where we're headed. And for an individual that is looking at Bitcoin saying, I missed the boat, maybe it's time to stop worrying about trying to get a whole Bitcoin. And if Bitcoin is something you want to own, think about how many sats you could be stacking. Start with 10,000. Start with 100,000. Now, how much is that? 237,000. We mentioned it before. It's around $84 US. So if you have around $84 worth of Bitcoin today at the time of recording this video, you have basically, if it was evenly split up, your fair share of Bitcoin for the entire globe. If you have more than that, then you're already doing better than the average individual. Now, many people are alluding to and anticipating the arrival of sat-cent parity. Now, what is this? A few years back, Bitcoin finally reached the price of $1. I know that seems laughable now, but at the time, it was very exciting. It lent a bit of legitimacy to this very early, just kind of upstart of a currency that had barely seen any attention yet. And to have 1 Bitcoin reach the price of $1, it was kind of astounding. It was like, wow, this might actually work. Now, the target is set on 1 sat equaling 1 cent. Currently, as we said, it's around 2,800 sats per dollar. 1 cent equals around 28 sats. But when or if we get to sat-cent parity, that means an entire Bitcoin would be $1 million. So not a small number to balk at. Now, what are some of the reasons why we might be trending this way? Why would the price inflate that much? Why would the price become so expensive that you have $1 million Bitcoin? Well, Bitcoin adoption has continued to grow. And there's a lot of money in the world. And some of it, a tiny, tiny percentage of it, has just begun to flow into Bitcoin. Now, the amount of transaction volume in terms of dollars has continued to blow up in kind of these spikes that occur every time within a year or so of the halving, the diminishing of the supply. And currently, we can see that there's billions and billions of dollars being transacted every single day on the network. In fact, over the course of its 10 years, Bitcoin has already transacted $10 trillion. And we're just, again, within the first decade or so. Now, companies and funds have started to recognize this, larger companies. They realize that holding dollars has become a liability because they lose value over time at an increasing rate. And so some companies have started to see the writing on the wall and started to funnel money into Bitcoin as a reserve asset or as a way to hold on to their purchasing power so that they aren't left with a bunch of dollars that buys them less assets than they would have been able to buy at the time of receiving those dollars. You can see here at almost 6% of all existing Bitcoin are currently bought up by companies and larger funds. It's pretty astounding to watch. And because of this, many large banking institutions and funds are projecting pretty sizable increases for Bitcoin price. You have JP Morgan, which famously in previous years, the CEO has called Bitcoin a total scam or a Ponzi scheme. Well, JP Morgan, the bank, the analysts there are saying potentially $146,000 per coin in the long term. You have models like the stock to flow model, which measures the amount of new Bitcoin coming onto the market versus the existing Bitcoin already out there, projecting things even within the year in the range of $250,000 per coin. You have Citibank, analysts at Citibank saying Bitcoin could surpass $300,000 by December of 2021. And then you have Guggenheim, a large fund, putting that price target even at $400,000. So where are they getting these numbers? Where are they coming from? Well, first let's discuss the idea of market capitalization. So market capitalization refers to the total dollar market value of a company's outstanding shares of stock. Commonly referred to as market cap, it is calculated by multiplying the total number of a company's outstanding shares by the current price of one share. So let's say a company has issued 100 shares on the stock market that people could buy, and each share was worth $10. Well, that company would be worth, $1,000 total. Okay, so that's kind of how they come to the market cap of a particular company. Now, this can also be used for assets like gold and silver and other precious metals, and it regularly is. So let's take a look at some market caps. Gold. Currently, $11.6 trillion market cap. That's how many dollars worth of gold exists today based on the current price. Silver is $1.5 trillion. And if we scroll down on the list of assets and companies here, Bitcoin is currently number 12. It's got 641 billion, almost 642 billion market cap. And that is simply taking the current price of Bitcoin times how many exist, which is around 18.6 million of them. You should get around that figure. And so what happens if Bitcoin grows to, say, the size of silver? Well, I did some napkin math earlier, and if Bitcoin were to grow to the size of silver, that puts it at a price of around $70,000, a bit more than $70,000 per Bitcoin. What happens if Bitcoin grows to the size of gold? Because let's not forget, Bitcoin is kind of going after that store of value asset. It's trying to replace things where people try to put their money elsewhere in order to preserve their purchasing power. And one of the things that really does that the best is gold currently. However, gold has some issues. It is physical and heavy and harder to move and transport and transact with and divide. And because of that, it became more centralized and easily seized. And long story short, it ended in us going off of the gold standard, so dollars are no longer backed by gold. Well, what if Bitcoin rises to that task of becoming another gold and only manages to match it? Well, if it were to reach that market cap there of 11.6 trillion, you would have a price per Bitcoin of around $550,000. Not a small number. What about currencies? Because Bitcoin is also competing with currencies. If you don't need to hold dollars, then potentially you could be holding Bitcoin. Instead of shifting your dollars into gold, you can just hold the money that you natively use, Bitcoin. And so what if we start matching the size of some of these major currencies? Right now, if we scroll down, Bitcoin is on this list. It is the 16th largest currency on the planet. But what if we get up to the number 2 and number 1 spots? Now, the US dollar is the second largest currency on the planet. And there are around 19 trillion US dollars out there. If we were to grow to that size, the price of Bitcoin would be around $904,000 a pop. And what about Chinese yuan? It's fairly larger than the US dollar. If we were to grow to that size, just replacing the top currency, I'm not talking about including all of these other currencies below it, just taking the top spot, we're looking at a price of at least $1.6 million per Bitcoin. Now, you got to think also, the reason people funnel their dollars into assets like gold, into stocks and things like that, is because they know that the dollars or whatever your native currency is are gradually reducing in value. You can purchase less stuff over time with it. And now, this I wanted to bring up. This is a quote from Vijay Boyapati, along with a little graphic here. It says, "The notions of cheap and expensive are essentially meaningless. The price of a monetary good is not a reflection of its cash flow or how useful it is, but rather is a measure of how widely adopted it has become for the various roles of money." So he has a little bar graph here, and he shows silver. And he shows how much of the price of silver is dictated by industrial use and how much of the price of silver is dictated by people using it as currency, either as coinage or perhaps as jewelry, but store of value kind of thing. And so with silver, around 80-something% of it is all industrial demand. Now with Bitcoin, or rather with gold, it has a much larger monetary premium. Only 10 to 20% of Bitcoin or of gold demand, probably closer to 15% of gold demand, is actually industrial demand. The vast majority of Bitcoin or of gold's price is monetary premium. And so if Bitcoin is all monetary premium because there is no industrial demand for Bitcoin, then could it possibly eat into the monetary premium of gold? I would venture to say yes. And how much of it could it take? 5%, 10%, all of it over time? I don't know. What do you think? But there are other things that people put their money into to protect their purchasing power. One example is real estate. A lot of real estate and a lot of real estate prices have been pumped up as a way for people to store their money. Famously, you have capital flight from China buying up real estate in other jurisdictions. A lot. Vancouver's pretty famous for that, where a lot of money from China will flow in and buy up the real estate, and you'll have homes sitting empty because it's a vehicle for people to store their money without having it losing value. Now, how much of the global market do you think is actually people just trying to store their wealth? A lot of people refer to their homes as their number one investment, and that real estate will always go up. But part of that is a symptom of our money not being able to hold its value. What happens when you replace the money with something that does hold its value? And how much of that market cap of global real estate could be pulled away? And I want to finish up with what I would say is the elephant in the room. Negative yielding debt. What the hell is that? Well, governments and companies can issue bonds. And bonds is effectively when somebody lends money to a government or to a company in exchange for interest on that debt. And you might have a 1 year, a 5 year, a 10-year bond, or a 30-year bond. And you get a certain interest rate over the course of that bond. So you lend money to the government for 5 years, you get a certain interest rate, 10 years, a certain interest rate. Well, because of the money printing and mismanagement of our currencies, interest rates are at record lows. In fact, many interest rates are below zero. And what this means is you could feasibly, depending on where you are on the globe, lend money to a government, and instead of getting anything in return, at the end of 10 years, after 10 years of locking up your money, you will get less money than you originally had. On top of the inflation where your dollars are already losing purchasing power. There is $18 trillion worth of negative yielding debt on the globe. What do you think will happen if Bitcoin rises to the challenge of siphoning away some of that negatively yielding debt into something that actually stores human capital and value across time and space efficiently? I'm willing to bet it will be pretty mind-boggling. And so I guess what I want to finish with here, and let me just switch my screen here. The supply of Bitcoin is known. We know with absolute certainty how many Bitcoin are available on the open market at any one time. We just looked it up. It's currently around 18.6 million. In fact, I can quote you the exact number right now. 18,617,418.75 Bitcoin exist right now at this very moment. We know the total supply will only ever be 21 million. The only variable is demand. We don't know at what point, what level of demand there will be for Bitcoin. But with everything we've just gone through, in my opinion, I think there will be a fair amount of demand for Bitcoin going forward. The only question for you is, what do you think? Do you think there's a place for Bitcoin? Where do you think that it might siphon some capital away from? And how much of it? And over what time period? So if you start going down this line of thought, you might start to realize that maybe Bitcoin isn't too expensive. Maybe you haven't missed the boat. Maybe the boat is still sitting at the dock, patiently waiting for some of the first passengers to board. I could be wrong, but maybe I'm not. Thank you guys so much for watching. Please do remember to hit like, subscribe, and share. All of those things really do help and help bump this type of content in front of more eyeballs. Now, if you want to help out the show in another way, you can hit up the previously mentioned sponsors down below. Those were Ledden.io, that was Cobo Vault, that was BitRefill, and PrivacyProsio for the Bill Fodl. And if you really loved what you saw, you can always hit me up with a Bitcoin Lightning Network tip at my tippin.me page. That is tippin.me/@BTC sessions. With that, I am out. Have yourselves a wonderful day, a wonderful evening, wherever you may be, and I will see you next time for your daily session.
Hodl the Bitcoin.